Let's take a look at some information and charts on Ethereum for Brave New Coin. So in contrast to BTC, basically in every regard, in nearly every regard, let me scratch that previous statement, ETH has continued its momentous rise. We'll start with hash rate and difficulty. Virtually no dip here in hash rate and difficulty relative to BTC. Very clearly had a down few days, but was not a devastating, catastrophic situation. The hash rate recovered, and because of the difficulty adjustments for ETH, the difficulty recovered much quicker than BTC has. So that's a part of this story. Issuance has continued to decline slightly on an annual basis, currently still around 4.2%, which is over 2 times BTC's inflation rate. The inflation picture is set to change with EIP 1559. Now we can speculate and say we think what might happen. But what has happened in the past with Ethereum is some unintended consequences. So yes, it's on testnet. Yes, we've looked into it. Yes, people have ran the numbers. All I'm saying is I don't think it's as one-sided as people lead on to believe or are led on to believe. We will have to see how the numbers look when they appear, basically. But it's certainly shaping up to be a very bullish situation when you're burning anything. Anytime you hear the word burn or buyback, the bull horns start honking because that means supply is getting eaten and demand typically follows. Even if demand stays the same and supply goes down, price goes up, right? So that's certainly part of the narrative here. If we look at the unconfirmed transactions for ETH, going into December, they had been holding it around 60,000 or less. And then after January, they basically held at 140,000. And how it works with Ethereum is if your transaction doesn't get cleared or confirmed within a certain amount of time, the transaction gets kicked out of the mempool. So it's difficult, unless you're looking at those other numbers, to really assess the mempool burden. Now, they recently increased the gas limit, the gas ceiling. Effectively, the block size not the same, but effectively the same. And the mempool has waned quite a bit. Gas fees have waned quite a bit. But this is more or less pointing to a scalability issue that Ethereum is hoping to address with layer 2 solutions in the near term. But the question is, what do we do here if Ethereum, if we get more and more transactions, right? Do we keep widening the highway, or do we look to other options such as layer 2? And hopefully that focus will shift strongly to layer 2, because the bigger you make the blocks, the bigger you make the gas ceiling, the larger the ceiling, the more and more you're pricing out the nodes, the people who operate the information flow of the network. It gets really messy. Basically, the bigger the blocks, the more issues you're going to have with centralized actors because you're pricing everybody out. The same thing with node size. And if we look at node size, it's currently above 7 terabytes, I believe. And this doesn't really get any smaller. We can talk about archival nodes versus pruned nodes. I don't want to have that debate, but the point is a full node isn't getting any smaller anytime soon. The bigger this gets, the more and more it prices out individuals, and the more and more it forces reliance on services like Infura. So keep that in mind. Something else to keep in mind is that as we flip to proof of stake, and I mention this in every proof of stake video, centralization is a big factor there. Who are the validators? How much do basically the master nodes cost? Currently, I think it's around 80 grand for a 32 ETH node. So all of this plays a role in centralization versus decentralization. Does it matter in the meantime for price? Probably not. Is it going to affect the entire ecosystem in the longer term? Absolutely. If we look at all the ETH on exchange reserves, continues to decline, so no bearish divergence here, no bullish divergence here. You're seeing exactly what you expect to see. As supply goes down on exchanges, price is going up. If we look at the total amount of ETH staked in ETH 2.0, currently above 4 million ETH. And this is essentially a certificate of deposit at this point, because once it's in ETH 2.0, that contract, it cannot be removed until ETH 2.0 is live. So that may be 6 months from now. It may be 18 months from now. It may be never, but that's how this works. So the more and more ETH people squirrel away, the better it is for price in the near term. Now, when this unlocks, should ETH 2.0 maybe not be expected to behave appropriately, or something. If you game theory this out, right, you're unlocking all this supply, so that's bearish. But if the network is functioning on a higher plane, more so than it ever has before, it may not matter. So that's something to consider. But anytime you're unlocking supply like this, whenever that happens for this contract, I think the baseline stance should be that'll be a bearish event in the near term at the time for ETH price. Right now, it's great. We're riding high on life. This is exactly similar to ICO treasuries. As soon as ICO treasuries started getting fat and happy, price kept going up, right? Because ETH reserves on exchange reserves kept going down. It's just, for me, it's kind of that simple. ETH Grayscale holdings currently have 3-point-something million ETH as well. That's sort of been stagnant since February as the premium became a discount and now is a slight premium again. If we look at some data on that, there was a massive premium on this into June, smaller premium into December, January, and the premium was all but gone basically the entirety of this year. Currently, the premium is 0.5% or something like that. If we move to some on-chain stuff, we look at transaction counts, all-time high. No surprise, gas ceiling went up. We're fitting more lunch meat in that hoagie, right? Every single block is stuffed to the gills, and you're getting more and more transactions per day. So it's hard to be bearish when you see that. Average transaction values had peaked relative to fees. As fees go up, average transactions go up because smaller transactions get priced out. And as fees go down, you'll see average transaction sizes go down. So just keep that in mind. Not exactly bullish or bearish, but super interesting to look at and to see is the network reacting to fees, right? So you can very clearly see how transactions had hit a ceiling relative to fees, and then we increase gas limits and that ceiling goes higher. Looking at block size is another way to talk about gas and gas limits. Block sizes all-time high, no surprise there. Average fees still high on the high side, but coming down. I mean, there's still a ton of activity on ETH, a ton of people using ETH for all sorts of things. NFTs, yield farming, lending and borrowing, all sorts of stuff, right? So it'll take some time for fees to come down. If we look at just no average, fees have come down substantially relative to where they had been. They're down from $2.11 from 32, from nearly 45, whatever this was. So they're coming down quite nicely. So that's a direct effect of gas ceiling. Total fees, this is how much miners are paid on top of the block reward per day, hit a new peak of 50 million on April 20th. So as the miners are paid less, it is potentially likely that they are selling less because they have less to sell. So this could have been partially why at the time ETH sort of stagnated at its all-time high, didn't really enter price discovery fervently because the people confirming the network were getting paid too well and they were just selling it. I mean, that's what I'd be doing if I was a miner for anything. And their pay got dropped substantially over the past few days, thanks to that increase in the gas ceiling especially. So really the big story for ETH has been that gas limit versus BTC, which has been hash rate. Sort of affects things top down. You can see where the rate limiting factors for all this stuff is and how changing it just slightly plays an important and massive role throughout the network, right? NVT, inverse metric of economic utility, currently at or near multi-year, multi-month lows, active address all-time high. Again, not crazy to see this because gas limits got increased and you're getting more transactions. Currently nearing 1 million per day on average, still less than BTC, or is it more than BTC at this point? Let's take a look. So still slightly less than BTC. I don't think ETH has ever had more, discounting this, whatever that was, mixing stuff. Discounting that, ETH has never really had a consistent higher active addresses than BTC. So it's getting there for sure. Something else to look at, obviously DeFi relative to ETH, Metamask monthly active users breaching 5 million for the first time. And really the big thing is January. I mean, January played an insane role in what's happening here now. It looks like things plateaued, right? And then January happened, NFT happened, alt season happened, new tax year happened, and it just gangbusters. Everybody's like, blah, let's do everything on ETH, right? And that's definitely what we're seeing here on MetaMask. They also unlocked a swap feature on MetaMask itself, and so it's like its own DEX as well. If we look at TVL in terms of dollar ratios, TVL is at an all-time high, at a new all-time high, thanks to ETH appreciation, among other things. And I like how DeBank measures it with a duplicate ratio, because some of this stuff in the list is double counted just because it can be used in multiple places. But anyway, still all-time high. So bullish there for sure. Nothing really unexpected here. You're seeing the fundamentals match price. That's really the most important thing. Ethereum, Google Trends, all-time high. Certainly down from early January, mid-January, but overall still remains extremely high. And if price continues to surge, I expect Google Trends to surge. Something to watch for is a bearish divergence on price versus Google Trends. If price does move higher or continues to move higher, and we see Google Trends continuing to peel off, then there may be an issue with the long-term health of that trend, because we continually need new money, right, to support price at those levels as the miners get paid, as there's this give and take in supply and demand. This is a way to measure that. Something else to mention is as ETH appreciates, the miners get paid more and more and more. So that has potentially more and more selling pressure. That's with anything, obviously BTC as well. So that's another thing to keep in mind. Moving on to technicals, 2-year MA multiplier in the green here, 2-year MA rather on BTC. In this case, it's the 1-year MA. So it's the 365 MA in the green. You can look at the 2-year on ETH, but there just really isn't enough data to backtest it. So you have to bump this down to 365, which is 1 year MA. The multiplier is 5 times the 1-year MA. And historically, it's basically been the top or close to the top. And currently that's nearing 4,200. So still a pretty decent sanity check for are we at the top yet? We're basically just riding this midline. Things haven't really gotten crazy yet relative to where they could based on the moving average multiplier. Buy zones at around 900 or less at this point. And historically, these have been pretty bang on the money as far as telling you buy zone, buy zone, buy zone, buy zone, buy zone. And yeah, you get burned in here a little bit, but it just tells you to keep holding and keep buying. And it hasn't told you to sell yet. So until it does that, I think ETH is certainly primed for higher moves on just this metric alone, really. And historically, it's been really good. This is the pitchfork since 2019. Pick 3 points, you get a rate of change. ETH is now well above that rate of change and is clearly reaching escape velocity. All the more reason to be ready for massive euphoria within the year, certainly. You got to think that this cycle will likely end by December or end of December. Q4, end of Q4. These trends on crypto like to contain themselves to the calendar year for a variety of reasons. So I wouldn't expect anything that's happening now, bullish-wise, to last throughout January, at least based on what I'm seeing now. We will likely see 2 things between now and January. A massive euphoric 4,200 plus top, as well as a massive pullback to sub 2K. That is definitely on the cards here when you're getting to price structure and price action that looks like this. Currently, the 200-day moving average is at 1,500. And we have this nice little diag here to guide us on the way up. Any break below this diag support, I would certainly expect a test of the 200-day moving average. I'm leaving the pitchfork on here because it's inevitable that one day we will return to the midline, just as we hugged this midline in 2020. We will once again hug this midline. You mark my words, anti-pitchfork people. We will be back. It may take a year and a half, it may take 18 months, but we will revisit this pitchfork. Oh, you better believe it. And really the big difference between BTC and ETH since January, volume came off substantially since January on ETH as well. However, ETH was not met after that consolidation with selling volume, but a mixture of buying and selling volume leading us to where we are at this current moment. So trend-wise, this looks phenomenal, obviously. 1050, another sanity check, just a simple cross. Haven't crossed bearish since the bull cross in October. Tons of support tests, but no bear cross just yet. The alligator fractal currently has you long with a trailing stop at around 2100, and it hasn't told you to re-add to your long since 2650, which is basically when I added to ETH on the Enzyme fund. ETH Daily Cloud still has you long since October, just like that 1050 cross. None of this has crossed bearish. Price is still above the cloud. Everything looks fine. Kijun support's currently at 2200. Very different picture than BTC currently as far as cloud strength. For sure, obviously that shows up on the ETH-BTC chart, which has made an historic move, reminiscent really of this. I really can't compare it to much else. Maybe early 2020. This was Q4 2017, I believe. So it'll have its moments. It's certainly having its moment right now, hitting a multi-year high, breaking above the cloud on the weekly for the first time since 2018. Just a massive, massive shift in market sentiment on ETH-BTC. It broke a pretty big horizontal level as well. I certainly wasn't expecting it to break this quickly. I think I mentioned June as far as the target for a bullish move. Broke above the midline of a pitchfork, maybe the most important thing, suggesting it will explore the top side of the pitchfork really for the first time since inception in 2019. So, it's hard to be bearish on ETH relative to BTC sitting here looking at stuff like this, certainly. And the top side, probably realistically looking at 0.1, 0.085 as far as potentials leading into 2022. Like, let's say things get really nuts this year and ETH goes wild. I think it's got, like I said, until the end of the year to really do something, special, on the bullish side of things. I'll also mention derivative options expiry on this Friday. Not, again, relative to BTC, BTC has a massive April 30th expiry, whereas ETH has a bigger June 25th expiry. So maybe that will be more appropriate time for things to top out. Tons of activity here, strike price wise, above 3,600, above 4K. So very interesting picture for ETH currently. Exciting to see what it'll do the rest of the year. I'll just mention again the Enzyme.finance ETH-BTC fund that I trade for Techemy Capital, non-custodial portfolio management tool. You can use Metamask or an equivalent hardware or software wallet to send ETH or USDC to the smart contract, which then allows me to control the trades, and you can see AUM, allocation, all the trades I make, deposits, withdrawals, no mins, no max. You can take anything out whenever you want. You can see a bunch of people have deposited over the past few days. A few people have withdrawn a bunch as well. So it's definitely not a Roach Motel or anything like that. Then I'll also mention the DeFi portfolio. This is 15 to 20 blue chip DeFi coins that we started earlier this month. Also transparent AUM allocations, everything that anybody would want to see. So that's all for this one. Like, dislike, comment, share, subscribe.